Good afternoon. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Slightly overcast Lauderdale by the Sea, but still beautiful like it always is. Got the underwater live deer field cam up today, as you can see, and lens is kind of dirty, but I just saw a huge tarpon swim by, and there goes the bait fish right there. And you can tell something's kind of spooking them up a little bit. And let's kind of, well, anyway, I hope your weekend was good. Mine was really nice. I need to get out there and go fishing. I need to get back in the water here. I haven't been out there in a while. Just been super busy with everything. Well, I'm sure you have been as well. We're all busy trying to keep up with everything. And here, let me just do a quick reduction here so you can read that. This is my quote for the day. Deception is sort of seduction. In love and war, adultery, and espionage, deceit can only succeed if the deceived party is willing in some way to be deceived. Ben McIntyre said that, and I got to be honest with you, I didn't look to see who Ben McIntyre is. So someone can make a comment in the comment section below and let me know. I'll likely forget, but no less, great saying, and it's true. Deception is like seduction. Whether it's war, adultery, espionage, whatever it may be, business, you name it. It can only succeed if the deceived party is willing in some part, some way to be deceived. I have found throughout my years of doing business and just in life in general that when you follow your gut feeling, and I believe this applies to everyone, it's just not me. I think everyone that's listening to me, everyone out there has this same gut feeling. And generally speaking, I think if most people just follow their gut feelings, they'd be right for the most part. Your gut is, I don't know, I mean, there's not like a brain in your gut, but for some reason you can kind of tell when you're being deceived. But some people love to be deceived. Some people love to be victims in life, and they just set themselves up to be victims like that. So no less, don't be a victim, folks. Don't let yourself be deceived, and there's a lot of deception out there. First, before I get into spot prices, speaking of deception, spot prices, I'd like to give a shout out to Wall Street Silver. These guys are the best. Take a look at this, one of the memes I saw. The Wall Street Silver guys are throwing cash over the wall. Meanwhile, the other guys are throwing silver back at them. That says a lot right there. And again, very enthusiastic group out there. I wanted to give another shout out to Wall Street Silver. Haven't talked about them for a little while. But these guys are enthusiastic stackers, and if you're not a member of Wall Street Silver, I recommend that you do become one if you're a silver stacker, because lots of cool stuff out here besides the meme. They're talking about the crash. Look, crash dummies, here we go again. And that's kind of what we've had. We've had a crash here, but actually not just overnight in the last couple days, but it's been a crash over the last couple weeks where they've methodically taken it down in the Crimex markets and in the overnight markets, the Globex markets, where they've quietly taken silver down collusively, and we all know how it's done. Over and over, we keep talking about it. But let's take a look at what damage was done last night. It's kind of recovered a little bit. Well, hang on, let me not say that yet. What time is it right now? It's about noontime exactly, so this is the noontime show. Gold kind of recovered slightly here at 1860.78, and look, a low of 1857, a high of 1885. So there you go, taking it down about $22. The damage more heavy in the silver market, with silver currently sitting at 21.90, but a low of 21.73. And take a look at that high, a 22.40 high, 50-cent swings. But you know what? I've always said that the 50-cent swings say a lot. When we start seeing 50-cent and dollar swings in silver to the upside or downside, there's something boiling going. There's something boiling in the markets. There's a reason that they're dramatically pumping these markets downward, collusively. I mean, collusively. These manipulative banks that are doing this stuff. And again, it's such to an extreme level. It kind of tells me that we got to see the bottom end or close to end here. I'd be high. The only way I can see sub $20 silver, which I see people talking about out there, the only way I see sub $20 silver, and I've said this many, many times in the past because I saw the same thing happen in 2008, is if the entire equities markets and the market collapses like it did in 2008, everything collapses. Even the paper price of silver and gold on the Crimex markets goes down as well. It happened in 2008 when the entire economy collapsed. I was thinking, well, hell, here's gold and silver's time to shine. Nope, what did it do? 20% or more. It went down. However, like today, like today, when in 2008, when the market, when the stock market and that was the first financial collapse that we've seen, and we're in for another one, I'm sure. So if we see another financial collapse, I can see price of gold and silver and platinum going down. Will you be able to buy platinum and gold and silver at those prices? No, couldn't do it in 2008. Premiums were extremely high, and delivery times. I remember even in 2008 with silver at $9 an ounce or $8, whatever frick it went down to. They knocked it down from 12 or 15 to 9. Again, I kind of forget now. Maybe I'm talking out my ass on that one, but they knocked it down significantly. I think it was at least 20%. You couldn't buy silver. There was 2 months. They were talking 2 months, 3 months delivery delays. They were getting $10 premiums at silver with half the price it is right now, folks. And the same thing with gold. Gold was, Gold Eagles had a $200 premium. Remember when Gold Eagles recently had a $200 premium? So if we see a 2008 type collapse in the equities markets and just the economy in general, yeah, sure, you can see gold and silver drop dramatically. But again, buying physical at that level is not going to be possible. However, I'm not going to rule out a way to make money here. There's a possibility you can make money in ETFs by hitting these ETFs when there's blood in the street and nobody wants them. They're going to bounce back up with the price of silver when it does. But if you're a physical stacker, that's probably not palatable to you. However, I do think it's a viable option if you're not able to buy any physical. Beat them at their own game. Cash in, cash out. Become a day trader at that point. Like I said, if we see a 2008 style equities crash, you see gold and silver crash, I don't think you're going to be able to buy physical at those levels. And I know, I shouldn't be saying this, but that's when I'd probably get in and out of an ETF like SLV or one of those. I wouldn't get, maybe Sprott, but SLV or one of those. Stick it up SLV's butt. But no less, let's take a look at the range here. 21.73 and a high at 22.39. Again, currently sitting at 21, close to that $22 mark. They're trying to knock it. They're trying to knock it, folks. And again, take a look. 21.73. Platinum holding its own very well. Platinum got knocked down 2 or 3 weeks before gold and silver did, and most of the damage was done. I think I'd be surprised to see a sub $900 platinum right now, but who knows? We're in kind of uncharted territory again as far as the economic and the political world goes right now. Palladium taking a real stomping too. It was below that 2,000 mark. Look at that, 1990, near the price of gold. In fact, wow, that's pretty amazing considering that Palladium was trading significantly higher. But what is kind of funny is that both these metals have really, Palladium's starting to see its bottom right now. And again, Palladium is mostly used in the manufacture of cars. I mean, is the reason Palladium is going down is because of less use of it? Are they anticipating less car sales? Are they anticipating less use of Palladium? Or is this kind of, tough to say? Or why is Palladium down so much? Does Palladium also have the same problem that the silver market does, manipulation? I don't know. I wish I could tell you this, but take a look at Palladium. I don't even like to talk about it much because it's not a metal we sell a lot of, but at these levels, it's getting near the price of gold. I think it's probably a buy as well. However, are they signaling to us that manufacturing is going to take a giant shit here? Because again, these are two metals that are highly used in the automobile industry, I think, and maybe even the battery, I think, market or something like that with platinum. All right. So what do we got going on here, and when did this happen? It happened in the overnight Crimex, Globex markets. Take a look at this. These are the overnight markets with the price of gold. Started yesterday at 1875, worked its way down to this almost 1850 range right here, 1858 or something like this. Again, overnight markets. In a tumultuous time like this, who in the hell would expect gold to be down? There's no good reason for gold to be down, any reason whatsoever. And the same thing with silver, folks. Any reason other than that these markets are crooked, that these paper markets are crooked, that there's a lot of corruption going on, collusive behavior by these big commercial shorts in these markets. And as I said many times too, in order to get the price of silver down, you got to have the price of gold down as well. So with the price of gold down, you can see that, well, I tell you silver guys all the time, wherever gold goes, silver will follow ultimately. And that's exactly, if you take a look at the charts, and where's our charts here? Let's take a look here. What chart is that? Gold and prices and silver prices. Look, throughout history, the two metals have almost matched. And gold always leads. Gold is the leading metal here. So where gold goes, silver will ultimately follow. And that's what we've always seen through history. This is not going to change anytime soon. Gold is not going away. In fact, gold is going to become a major player in the economic markets in the upcoming future, I believe, especially in the Russian, Chinese world, in that region of those countries. I also believe that once the equities markets start to tumble, we'll see a tumble in the gold and silver markets. Again, that's the paper markets we'll see the tumble in. But ultimately, I think when people start looking for safety, gold is going to be, it's been around for 5,000 years. People still have not forgotten that. You're going to see a lot more money heading into the gold and silver markets, so we'll see prices go up quite substantially from here. Look at these low prices, folks, as simply as a gift. And again, when did these markets kind of get hammered? Overnight markets up during the New York Crimex markets, down during the overnight week markets. So it looks like the monkey hammering is occurring in the overnight markets and these really soft week markets where they can get away with it. I don't know how they're doing the spoofing or whatever the frick they do out there. Silver, the same exact thing. If you take a look, overnight markets in silver, who trades in these overnight markets? Large amounts of silver only just to drive the price down. Who does this? I mean, if you're selling silver, you got large amounts of. There's no capitulation in the investment as far as the retail bar investment world. In fact, it's just the opposite. Demand is massive. There's no reason for these downs like this, other than sheer manipulation, folks. And again, done in the CME markets, Crimex markets. So at some point. They're just getting so desperate. We didn't see this happen over and over and over right now. So I think that something's happening here. I think that they're in desperation mode to cover these short positions that they have, and to get these longs to capitulate so they can, again, exit these short positions. Can't see them continuing this. And again, this is just losing for them. They're not going to make actually at $23 an ounce, if a lot of these have these shorts at 23, if they're covering at a lower price. But again, this manipulative behavior is just over the top right now, and I think it's really getting towards the end stages. All right, let me get out of there. I'm just tired of talking about that stuff. Best deals out there, and what am I really good at? Well, I'm a retail gold and silver dealer. Wholesale and retail gold and silver dealer. I've been doing this for many, many, many years, know my product real well, and I'm here to advertise my business. So if you live in South Florida, we're Commercial Rare Coins and Precious Metals. That's my business. I advertise to beat JM Bullion on their commonly or price products that are priced good, in my opinion. Like what's the best deal that JM Bullion has? They have 100-ounce bars, and that's their best deal they have, in my opinion. I wouldn't buy Eagles for sure. I wouldn't buy the other products, not because I don't like them, just because they're way overpriced. So if I was going to buy from JM, I'd buy 100-ounce bars. The next thing I'd buy is probably kilos, and then 10s and 1s. Of course, anybody that sees the JM page right now, if you've been with me, nothing's changed. This is the same stuff I've been saying for months and months and months. It's still the best deals are still the same products, folks, so you can fast forward until you see this page gone. Because it's the same thing. I'm just repeating myself. But for you new folks out there, 100-ounce bars, 10-ounce bars, 1s and kilos are the best deal that JM has. And me, as a local dealer here in South Florida, I will beat their price. So if you live in South Florida, you don't need to order from JM Bullion. Not that they're bad guys or anything like that. They're a good company. I'm just very competitive as a local business, and I'll beat their prices on gold and silver products like this. If you don't live in South Florida, remember, I can't sell stuff. I don't ship. The only way I can deal with it if you come into my store, unless you plan on making a trip to South Florida. Sorry, folks, you out-of-towners, and the folks that listen to me that don't live in South Florida, I can't ship to you. However, I do encourage you to find yourself a good local dealer. It's really important to keep that money local. And I think you find a good guy like myself, he should be able to beat JM Bullion's prices as well. That's what competitive local brick and mortar should do if you want to stay in business. As far as gold goes, what's the best deal they have out there? Gold, they have, I just stick with bars. Again, folks, if you've been watching my video for months and months and months now, nothing's changed as far as my advice on product. And again, my advice on product in a nutshell, buy the least expensive premium product, recognizable product that you can. And when I say recognizable, I mean recognizable within the industry, not recognizable by your buddy or your friends or recognizable by you. Buy the least expensive premium, recognizable, industry recognizable product that you can. Whether it's gold or silver, Don't get hung up on design. Don't get hung up on how pretty it is. Don't get hung up on that your buddy says this product's better. Just buy the least expensive premium that you can. And again, the least expensive still in gold is gold bars. That says gold coins, but we're gold bars. We're going to in stock gold. And like I said, I'll beat these guys' prices. If you want to buy Eagles, I have them. But the best deal is in gold 1 ounce Valcombis and other type 1 ounce gold products like the Credit Suisse. But as I said, I will beat their prices on the Eagles, Maples, and these other products. But I'm going to kind of encourage you to buy the least expensive product on this page, which is this one. All right, let me move out of here. And hey, we already looked at that. I was telling all you silver stackers, even if you don't buy gold, you got to follow the price of gold, because wherever gold goes, silver is going to follow. And interestingly enough, I did the silver to gold ratio. Even though gold's gotten whacked down pretty much, silver's taken the biggest beating of all. And of course, we know why, who, where, and how. And for you guys out there that understand this, it provides you a great opportunity to buy this stuff at a cheaper price. And if you're new to the gold and silver business, don't panic. You know, just go fishing or something like this. Relax, go swimming, enjoy your summer, enjoy the spring here. This too shall pass, and prices will be higher at some point. Remember, if you're listening to my video every day, we're watching this like daily. So, you know, we can't expect these markets to move up overnight. And when they do make their massive move, you're going to be happy that you're in precious metals. Again, that's just my opinion. Gold to silver ratios, 85 to 1 right now. I did it a little bit earlier thereabouts. So the gold to silver ratio disparity is really big. This says two things to me: that either the price of gold is going to come down further, or the price of silver is just way oversold. Again, I'm betting on the fact that silver is way oversold, well, not just way oversold, way over manipulated, but oversold environment based on the 85 to 1 ratio. Does this mean that silver could go down even further? Sure it does. And gold, we could see 100 to 1 ratio. Remember when we saw 120 to 1 ratio with gold and silver? However, what that was that gold was moving up and silver was just languishing in a certain level. Maybe we're at that point again. Maybe we're going to see silver sit at this 21 and 22 level. We'll see gold start to hit that 1900 plus level and keep going up. And maybe we'll get that big wide range. Again, this all tells me that I just think silver is undervalued. I think when you look at the gold to silver ratio, you got to say to yourself, is gold going to come down? Is that ratio going to tighten up? Or is silver going to kind of, the silver oversold? All right. It's not just gold and silver markets that are getting hammered here. Folks, take a look at the equities markets right now. I just did a refresh. Looks like the Dow Jones down 400 points. S&P and NASDAQ bleeding pretty heavily today. Markets all across the board getting hammered. Is this it? Are we in a recession? Are we in a recession yet? Are we in a depression yet? Are we there yet? I don't know. There's some people that, a lot of people don't realize this, but we were in a recession in 2007, but they just weren't admitting it. You didn't see it on TV, but the recession really started in 2007, the latter part of 2007, and the equities markets blew up in 2008, more or less. I mean, just blew up. Everything blew up at that point. Are we in that same environment, or is this just kind of like that same environment but slow motion, if you got what I'm saying? Are we seeing a slow motion implosion of the equities markets? I believe that's what we're seeing. I think they're slowly letting these markets fall. I think the plunge protection team, which is the Fed and the government, is slowly letting the air out of this market rather than letting it collapse all at once. I believe that the only reason you're seeing a negative 400 today instead of a negative 1400 today is because support with the presidential plunge team. But again, can't prove that because that group works in complete secrecy, and they're able to, and that's true. Just type in, this is not conspiracy, by the way, folks. Type in plunge protection team. Pause this. If you don't believe me, pause this video, go to Google or whatever you use and type in plunge protection team, and then you'll know what I'm talking about. And again, I think that's the only reason this market hasn't collapsed. They're slowly letting the air out of this bubble right here to best they can, because the only thing they learned from 2008 is collapse is bad, collapse is bad. They didn't learn how to fix it. They just learned collapse is bad. So what are they trying to do? Is prevent the collapse by just pumping more air into the balloon or the bubble, right? Oh, we know how that ends, folks. It never ends well. At least we know it. And here's the thing: is we're not there's no deception with us on this. We see this clearly, but a vast majority of people in the world don't see this. there is a lot of deception, a lot of people being deceived out there. Well, where are we going from here? We looked at equity markets. There's another market just getting absolutely monkey hammered. I've never been too kind to Bitcoin because to me it's just electronic fiat to some degree, and I know it's limited to how many people can buy it. I don't hate the market. It's just not my thing, But no less, I still thought it would hang out. I thought it would hang, like with gold too. I mean, think about this. These are two assets classes, and they call Bitcoin an asset, and I just call it an asset as well. I guess it is now to some degree, but take a look at this. The two asset classes that were supposed to do really well during inflationary period are being held down dramatically. Folks, I said a long time ago that I thought Bitcoin would be manipulated as well if it wasn't being manipulated already, and I believe that because I really believe that this Bitcoin should be higher based on the number of people out there that were very supportive of it. However, I think Bitcoin's been monkey hammered down by the big collusive whomever they may be as well. I think this kind of deception and this kind of manipulative behavior goes on in all these different markets, folks, even in the Bitcoin market. I think we're living in a kind of topsy-turvy world. Consumer price index for all urban consumers, purchasing power of the consumer dollar, and U.S. city average. Look at, you can see since 1913 the buying power of the dollar is just freaking trash throughout history. But take a look at this timeline. What is it? 01, hang on, 01. And we're going to go 222 January. Take a look at this line just since the beginning of the year. Crap, you could take a sled down that and get some pretty good speed on that, folks. 35.6 down to, we're down to that 34.8 level. And this is just in, what is it, 5 months now? Take a look at this. This is not good, man. Things are not good. And the newest misery index, look where it's at, 11.67. Where was the height here? This is the height 2020. This is complete closure land, 1503. The blue line represents unemployment. The red line, the little red piece in there represents inflation. And again, we still haven't seen the misery index as high as it was. Remember, this was complete shutdown. This is when people were most miserable, when governments made their boneheaded decisions to shut everything down and screw the economy. Folks, remember one thing I've always said is that they're going to try to blame the economy and all the woes that most people are going to suffer on the Critter 19, okay? It's not true. It's not true. All the woes were created by how they handled the Critter 19, shutting down the economy, pumping out endless amounts of money, riots, creating problems in elections, creating problems with between people. It's just evil shit. All right, no less. Gosh, here I go. But here you go. 15 was a high during Trump here, and that was pretty high if you go back and you look throughout history until you get back into the Carter days. I'm not going to make you dizzy by going back there, but wow, look where Biden is right now, 11.67, and this just keeps growing, and that's the inflation right there. See that red line? Even though unemployment rates have gone down, the truth is, unemployment's only gone down is because less people are applying for unemployment because more people refuse to work. There's a huge amount of non-working folks out there, and that's the issue that we got. That's why you see unemployment, people applying for unemployment because they've applied enough times they can't get unemployment anymore, or they just quit getting a job, or they live in mom's basement, something like that. But 11.67, and that's all inflation built in. All right, I'm going to go backwards. Take a look. That's probably 1/3 of this is unemployment, and 2/3 of that is inflation. Let's go back and see last time we saw that kind of disparity between inflation and, I'm going to keep going, inflation, and there we go. All right, there's a high inflation rate, and whose administration was that under? But still nowhere near as high as what Biden's looking at. That was G.W. Bush, all right. Let's see, again, folks, I don't think we're going to see that high inflation until we get into, here you go. There's Bush Senior, but half, half inflation, half unemployment. Let's get up to a point where we can see where it's mostly inflation here. And here you go, under Reagan. It looks like maybe, well, not quite even 1/3. It looks like, here you go, in the Carter age. there you go, like 1/3 of the misery index was unemployment, and 2/3 of it looks like it was inflation. So the only similar times we can show on the chart is during the Carter administration right here. And how high did he go? Where is Carter's 11.67? That well, Carter started at 12.72, but where did Carter start where he had 2/3 of that chart in the red? Let me take a look at this where we had a similar situation. There you go. I'm thinking that this is probably in the 78, 79 period. Wow, about the time when gold started taking off into its stratosphere at $800 an ounce, which the equivalent today would be about $5,000 and probably dollars. All right, well, anyways, it looks like, here, sorry, I don't mean to make you dizzy, but take a look at this. 1/3 of that chart is unemployment, and 2/3 of that is inflation. Last time we seen that was during the Carter administration, 1978, 1979, and that didn't end well. Gold versus real rates, folks, and take a look at this as well. But the problem with real rates here is that the real rates that they're using is the official government real rates, and which shows inflation. Where is it? I think I saw it down here somewhere. I don't see it here, but I think they showed inflation rate at what was it, 7% or something like that, 5%, when in fact it's closer to really 12 or 13%. So this chart is really meaningless according to that. But take a look at that, real rates going up. And here, I'm going to move out of this chart because I don't even like using it. It doesn't. The figure's just wrong. Gold strange behavior explained once more in Bloomberg News. And I guess there was a hit article in Bloomberg News. Jared Dillon wrote an article that says, well, here, let's take a look at it. Again, it's just a hit article. Gold strange behavior shows it's no haven. All right, just terrible articles. And again, of course, it's written in Bloomberg. They'd rather have you in equities while it's crashing than gold, which has been around for 5,000 years in a safe haven. But anyways, Gada talks about this strange behavior and what their opinion of it is. I recommend that you read it. Boy, I'm getting a little bit long and long here. I'm going to move out of here and quickly go into ZH, see what's going on. Nothing good. I want to keep this video a little bit short, and so I'm going to just move into, take a look at that. I guess that's pretty much over. I'm going to move into yesterday's video, which was, or Friday's video, which was Get Rich Slow. Backed up the boat. Good for you, tree climber. Yeah, can't argue with that, Mr. Wilson. Been stacking 3 ounces a month for over 10 years. Not going to stop now. Good, great opportunity to buy the dip here. Can anyone tell me how we as a country can be in debt for something that has no value? How do you pay back something that has no value? Yeah, well, hey, listen, they're living a lie there. Hey, T, what's up? Slow and steady works for you. It works for me too. And what I was talking about when I was saying get rich slow, I let Marcelo name that video. Not let Marcelo, but Marcelo name the video. He does them sometimes. I do the thumbnails sometimes. But basically what I was talking about was, you know, a lot, if people complain, well, oh, look, silver's still down 21 bucks an ounce, $22 an ounce. You know, it hasn't hit its high yet. And I think there's some get-rich mentality that people expect with gold and silver. And I've always said, if you're in gold and silver to get rich quick, you're in the wrong place to be. It's a slow and steady kind of deal. It's more of a preservation of wealth. It doesn't double and triple overnight. It doesn't. The charts don't usually go 45 degrees up, and they do at some point, and we're going to see that at some point when we get to the next level. And once we hit the next level again, it'll taper off and do the same thing. It'll taper. Who knows how long it'll taper off? Once we hit the next level, and then of course gold and silver will bubble a little bit. It'll come back down. Then we'll hit another level, and it'll sit there for a while. Again, it just depends on what happens with the economy as well too, and how politics end up. But nothing good as far as fiat currencies. No fiat currencies survive that long, and ultimately gold and silver will or has. Hey, I'd like to thank everybody here for watching. We try to fly straight. They've been programming us since we were children. Yeah, that's true. And where are we going from here, folks? I'm going to, again, like to thank everybody for watching here. Rusty Rabbit, John Gordon, Johnny Boy, All Records, Donald, Welco Services, thanks. We're going to move into the close of this, which is think for yourself and question authority. I'd like to thank everybody for watching today's video. Did I even flip the coin here, by the way? Haven't been doing it first thing. Let's flip the coin and see what's going to happen. What will tomorrow's markets be like? Heads. Looks like a bull. Well, this coin likes bulls. So, hey, think for yourself. Always question authority. And hey, I forgot where I was going with that. A little foggy brain today. Hey, thanks for watching. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals. Call us anytime at 954-493-8811 between 10 and 4, Mondays through Fridays. If you live in South Florida, we're the place to go to when it comes to precious metals. If you don't, please find yourself a good local dealer. Try to keep that money local, and if you can't, hey, JM Bullion's a good company to go to. SD's a good company. I believe APMEX is a good company as well. But again, I highly recommend try to find yourself a good local dealer. They should be able to beat the prices of those guys like we do. Thanks for watching, and I'll talk to you tomorrow. Bye now.